Becoming a profitable day trader is not as difficult as it may seem. Once you understand the basics of technical analysis, trading psychology, and how to actually start trading in the markets, you're already halfway there. After this video, you will have your trading software, your trading brokers, you will understand technical analysis, trading psychology, risk management, and all of the essential things. So without further ado, let's get right into it. But before we start, I need to take a break from the markets, so let's go for a ride. I remember 4 years ago when I first opened my trading software, it looked like complete rocket science. The price chart was jumping up and down, there was all of these confusing numbers, there were thousands of buttons on the screen and I didn't know what to do. It looked really confusing, and at first I just shut down my computer and I thought, that's it, this is not for me, this is really confusing and I will never be able to become a day trader. And now, after years of learning and hustling, I'm not only able to trade full time, but I'm also able to actually teach you guys how to start as well. So before we start structurizing and talking about the simple steps that you need to start day trading, I want to address the really common misconception about day trading is that a lot of people think that it is gambling. And why do people think it's gambling? Because they mostly cannot succeed in day trading. One, they do not put enough effort, and two, they quit before they actually start making money in the markets. And that's why they are saying that it is gambling or saying that it is impossible to succeed in day trading. So now that we understand why majority of people quit, let's talk about the first step. So the first step to start day trading is to actually download a trading software. You will also need a broker, but broker is not necessary at first. Broker is the place where you put your all real money orders, where you deposit your money and then you can trade with it. And trading software, on the other hand, is a platform which provides you with tools that you can use to analyze the markets and perform technical analysis. So you probably noticed that there are probably thousands of different trading platforms and brokers. So I will make it very simple for you. In terms of trading brokers, you can consider using Forex.com or Capital.com. These are trusted brokers where I personally traded as well, and you can find link for those in the description. And when it comes for trading platforms, I would recommend you TradingView. TradingView is currently the most advanced trading software in the markets. Actually, the majority of traders use it. Doesn't matter what you're trading, whether you're trading stocks, Forex, or crypto, everybody uses TradingView, but it's not for free. It costs something like $17 a month, but that's definitely okay. It's not a big investment and it will definitely is essential in your trading journey. So before anything, you need to understand what do you want to trade with. The main markets that you can trade are stock market, crypto market, and the Forex market. They all have different advantages and disadvantages. This is not the video where we'll discuss everything because it would be too long. I am personally a Forex day trader, and that's why we'll focus on Forex day trading in this video. So the first thing that you need to decide is what market you will trade. So now let's go ahead and move to my trading desk and I will show you what TradingView is all about. Okay, so now we are at our trading desk, and here, as you can see, I am currently on TradingView. I will explain to you what do all of these tools mean, what do these pairs mean, how to find time frames, indicators, and all the essential stuff. And we will cover technical analysis just a little bit, but technical analysis is a very broad topic. It would definitely take a lot of hours to explain, or even days. So we'll only cover a little bit of technical analysis. So this is the TradingView platform. So let's start from the beginning. Here I have my pair set up, And because I'm a Forex trader, this is what I called Forex pairs, because you can change the name. And here I have all my Forex pairs, and this is very changeable. You press this plus button, and here you can see stocks, funds, future, Forex, crypto, basically anything that you like. And in order to add all of these things, or add crypto or add Forex pairs that you want, you can just press this plus button and you will have this pair in your watch list. Then it will be over here, and then you can easily change everything. You can, as you can see, I have customized it here to say USD, Euro pairs, and so on. So it's definitely up to you. It's very simple. So the first thing that you need to do is add, basically craft your watch list, and you will have something like this. And then you can just move between the pairs by pressing on it, and it's very simple and easy to understand. So this is price action, and all in all, your trading view may look a little bit different because this is the customized version. Trading view itself, the default mode looks a little bit different than this, so do not be afraid if it is different. Basically later you will be able to customize all of these things, but the essence is the same and all the tools are the same. So then we have, of course, our price chart. So we'll not talk about candlesticks and all of these things, this is not for that, but basically in general, if we are talking about trends, you can always look at the trend when you're trading, especially if you are new. Think whether the market is going upwards, whether the market is going downwards. So basically look at the general trend, try to identify trend lines. As you can see here, we have a trend line. Well, this is not perfect trend line, but it serves the purpose. Here we have counter trend, we have support and resistance levels. As you can see, it's basically everywhere. Boom. And by just pressing a few buttons, we actually now have a much more clear vision of what is actually going on. Here we have the counter trend, then the price moved upwards, and we are at our support level. So most likely the price will eventually be moving upwards, and then we will be able to open a position and benefit from the markets. So this is really simplified version of everything. At first you will need to practice to do things like this. At first when I started, I didn't even understood what is a trend line, but now for me to, I just open the chart and I instantly see in my mind where are all the levels, where is the market structure, where is the trend lines, and basically I already see it before I mark it, and then just I instantly can predict the direction of the market. So this is just practice, a lot of years of practicing. You will be able to do the same, but for now, at first, you don't need to be discouraged because it's difficult at first. But slowly but surely, after understanding technical analysis, you only need some basic tools like trend line, support and resistance, market structure, and when you understand these things, you will be able to understand the markets. So then we have different tools right here. So we have a lot of tools. First of all, we have lines, we have a trend line, we have ray, we have extended line. So basically, we definitely do not need all of these tools. This is too much for me. Well, some traders use these different tools. I do not use it, and you can make tools as your favorite, and then you will have this custom tools section right here. So for you, you probably do not have it, but if you go to tools and you select something as your favorite, you will have these things. So here we have Fibonacci, we have Fibonacci we have Fibonacci channels, Fibonacci retracement, and all these things. I do not use these fancy tools. Don't think that the fancier tools you have, the better the profitability will be. Definitely keep it simple. And here we have all these different tools. You will be analyzing them on your own. You have text, you have icons, you can measure things. So here, as you can see, we have this number which currently says 25, and this is the pips number. Pips are used to measure the price movement. So again, at first it may look confusing, but when you start using it, start calculating, it will become very simple. You need pips in order to identify potential size of the movement. Basically, also you can use it for identifying where your stop loss and take profit orders will be. So these are the tools. Now we can talk about a long position and short position. So these are basically, here we have buy and sell buttons. So remember that this is a trading platform. You cannot open your real positions, but you can connect it to the broker, which TradingView gives you options to connect to the broker, and then you can actually trade it on here. But majority of traders actually use external brokers. So here you can have theoretical long and short positions. So this is short position, this is long position, and basically if you are buying the markets, if you would press the buy button, something like this would come on. And here you can see that we have pips number, so it says 20 pips. And basically, again, you will later be more familiar with these things, but basically if you are just starting out, don't overcomplicate it, just use 30 pips as stop loss. For day trading, this is probably the best ratio. And then in terms of your target, aim for at least 1-to-2 risk reward ratio, or you can use 1-to-1. That's perfectly okay if you are just starting out. So this is about the positions you can buy or sell, and these are theoretical positions that you can put. And basically you can analyze the markets. You can just put this position, and then you can wait and see whether you are hitting these positions, or also you can easily connect paper trading to this TradingView account, and you will be able to use paper money, so basically demo money, and you will be able to trade with fake money, and that is a great learning tool. So then if we look up here, we have our time frames. So basically time frames, again, we will not talk about all the theory about time frames, but here you can change them. You can go to 3 hours, you can use daily time frame. So if you are a day trader, just stick to these time frames from 1 to 4. You do not need to understand everything. These are for scalpers, these are for day traders, these are for swing traders. So really simple theory. Then we have indicators, basically thousands of different indicators. So do not overcomplicate things. Try to aim to have at least 1 or 2 indicators, definitely not more, because you will be just complicating your life. So in terms of indicator, you can use moving averages or RSI or MACD, but make sure you understand them. So now that you understand how to start, you have a basic understanding of technical analysis. The other piece of the puzzle is trading psychology. Now, trading psychology cannot be just explained in 5 minutes. It is a really broad topic, and some people actually study it for years because it's so complicated. The whole philosophy about trading psychology is that you must manage your emotions while trading. Because if you have a great strategy but you do not understand trading psychology, you will just never be a profitable trader, because psychology is what keeps you consistent, what keeps you going, what helps you to manage your emotions, because in trading you have to trade like a robot. You cannot be emotional and angry about every single trade, you cannot be impulsive, you cannot make dumb, quick decisions, because it will just cost you money. So the first rule that I will give you about trading psychology is never trade when you're angry, happy, or sad, because these are the main emotions that happens when you're day trading. Sometimes you will be angry because you lost money, sometimes you will be happy, then you will make 2 optimistic decisions, sometimes you will be sad, then you will make 2 pessimistic decisions, and all of these things will just happen, and you will just make bad decisions, and therefore you will lose money. So it's really important to have a cold mind when you are trading. You have to be emotionless, you have to only think about business, think about the markets, and make rational decisions. Another rule is always follow your trading plan, because trading plan is what will keep you consistent. You cannot just have a roller coaster in day trading when on one day you are trying to make as much money as possible, and on the other day you are actually losing even more money. You have to be consistent. You have to have your risk management calculated, how much you're risking, what is your take profit. And then with this approach, you have to be consistent, you have to create your strategy, and the best thing is to have a trading plan, which we will talk about next. So it is absolutely crucial for you to write down these rules. It's not enough just to know the market structure and the trends. You have to know trading psychology, you have to study it. So please do your research. These are the rules that will guide you. And the other thing that I want to talk about that is really important is following your trading plan. So now you know where to trade, you have your trading view, you probably downloaded a broker, you know technical analysis, you know how to start, how to do some basic analysis. Again, if you want to learn more about technical analysis, more psychology, risk management, and have a structured approach, if you want to learn that, the link is in the description. So if you want to create a trading plan, you need to have these things. First of all, you need to have your strategy. You need to create a strategy that you will use, and you will be testing that strategy. Then you need to define what market you are trading, what time frames you are using, what pairs are you trading if you are a Forex trader, what trading style you are using. So are you a day trader, are you a scalper? And have all of these small things in your trading plan, so that every time when you come to the market, you can see your trading plan and it will keep you consistent. Write down the psychology rules, all the rules that is important to you when you're trading and that you will try to follow. And then think about risk management, how much money you're risking, where is your take profit, and all of these things. So you cannot break down everything in this lesson, but hopefully you guys enjoyed this episode. Hopefully now it will be easier and clearer how to start in the Forex market. All the necessary links are below. So if you guys enjoyed it, leave that like button, subscribe, and see you in the next one.